CEO Zones, where we are a member-driven business where we look to give advice and advisory services in our app community for CEOs and owners. Today we're having another episode of Meet the Speaker, and I'm honored to have with us my friend R. Adam Smith. Adam is married and the proud father of 3 children. He's been very involved with foreign affairs, the arts, design. He's an avid collector. He's a patron to and sponsor to great charities and numerous events, and board members of the International Fine Art and Antique Show, Carnegie Hall. You're a state level pianist and champion all the way back to, I think you said age 5, somewhere I read that you started playing the piano. You're the leading global expert in private company finance, family offices, strategy. You've served as an investor, an advisor, a financier, over 50 private equity-backed companies since the mid-90s. You look very young. Fortunately, you and I have known each other about 10 years now, I'm guessing. I'm not exactly sure of that. We could do something there. But the bottom line of your entire bio, which folks, again, I want to stress, it is pages long. He has invested almost $1 billion in his own life. He's been very involved in private equity, Wall Street throughout his entire career. And he's the founder of RAS Capital. He's also the founder of Family Business Audiocast. Very active in the private equity family enterprise space. And with that, Adam, I'm going to turn it over to you because there's many things that we could talk about, from Salomon Brothers to Wall Street to all types of things. But what would you like to add to your bio before I give you this first question?
Thank you, Bill. It's good to see you again, and great to see your platform growing with really inspiring people and thought leadership, and giving back to all of us with your own expertise as well as a trusted advisor. So thank you for that. In terms of my background, I would say still trying to learn and build businesses and add value to clients or companies or a family office. I'm back in the game, investing again, and within a family office, and working with other families and enterprises to invest together or build companies. We'll talk about that collaboration dynamic going on in the industry, in the private capital industry, as opposed to Wall Street and the public markets. At some point in their life, you start focusing on legacy and what you're building for your own brand and your own accomplishments and your children, and wanting them to admire you and to learn from what you're doing and what you leave behind, not just the wealth, but also the footprint of building organizations and unique companies that can last. So I think that's really where things are for me right now. I did start a charity also as a founder last 2 years ago called Capitalism. I think it will really take off next year when I have more time to pay attention to it. So I look forward to working on that and sharing more about that with you.
That is new to me, so I do want to come back to that, and maybe at CEO Zones, the generosity zone, we could help get that lifted and accelerated for you. So you mentioned collaboration, but many people consider you a deal maker. Could you just explain to CEOs and owners what a deal maker and what you might do that would be beneficial to them?
Sure. So deal making, I think, is obviously super important in many industries, not just investing in banking, but also working on deals for your clients, with your clients, looking at getting to outcomes that are win-wins, that require collaboration, sacrifice, compromise, and negotiations. So it's an art that's important, I think, for many people to work on. It's a master to improve, especially the next generation. I think working on deals, working on agreements, negotiations, debating around topics and real dialogue is important, and as we see in today's world of that's very heavy in social media news and short clips, and really working through technology, sometimes not in person. I think as leaders in the industry, it's important to share with the next generation, what it's like to have real, genuine communication and work through the different topics and debate to get to an outcome, and that requires really in-person, tangible, genuine thought and conversation to get deals done. So for me, it's been several times in private equity and several chapters in investment banking, and now I'm back in the investing business and working on deals to get done that are mutually beneficial for both sides. So there's always a deal on the other side with a founder, someone who's worked hard founders to get their businesses going, and they need money, they need partners to grow. So getting a deal done means that you find a solution that is also going to work for them, at the same time making a wise investment choice to put money into that company, whether it's a venture company or a buyout. You got to find a way to find a balance between the two sides.
Excellent. Thank you. Back in 2023, you founded Family Business Audiocast. What's your vision? What's your purpose for Family Business Audiocast?
Well, it's certainly not to become a famous podcaster. That was not the goal. But now we've had 35 episodes and 50 guests, and we're running about 40 episodes a year. Plus, there's kind of the hobby is picking up in the content front. So we have also adding that thought leadership content to the market, to the family office, to the family enterprise, the family firms, family businesses. Really a broad ecosystem of any company that is relevant to a family owner and the legacy related to that family business. We'll talk maybe more about those distinctions, but really the audience is larger family health businesses, which is a passion area of mine, coming from family of entrepreneurs, investing in buying family health businesses, going back to starting in 1998, and then again in 2002 starting Circle P Capital to invest in family-owned or entrepreneur-owned businesses. So over time, maybe half of the businesses that I bought or invested in with my partners, certainly not all of my money, but with big investors like Carlyle and Bain and Golden Gate Capital, Magnetar, Kilvest. These were family-owned or second G2 family-owned businesses, and they require a bit of additional care and the softer sell, the softer skills to relate to them. So there's the M&A side, the investing side that's relevant, but then there's also the family office itself as a organization, as a entity that is professionalizing the family investing activities. And then lastly, there's the whole softer side of softer skills and governance and succession planning culture. So all that is going into the Family Business Audiocast as a thought leadership platform globally, with newsletters and expert contributors and the audiocast itself. It's all pretty much powered for now on LinkedIn, which is working well. They're actually doing a good job supporting that and growing it, actually restructuring it on January 1 actually to be a bigger business for LinkedIn. So it's going well, and it's going to get bigger as an efficient form of sharing information to the market.
Okay. So this is a long question, but I know you'll give me that chance. Can you share any of your strategies for executing successful acquisitions, mergers, capital raises? Since you've got that over $1 billion worth of transaction experience, what are some of the things that an owner or a CEO or a shareholder, frankly, might learn? Just give us a little bit of a training, maybe, if you could. Something that comes to mind, which I know that's a huge question, so.
Yeah, back to your question. You talked about deal making. You talked about family business. Look, ultimately, doing investments, let's say, or buying companies is a craft and an art at the same time, and it's getting increasingly competitive globally. Prices are high. Financing has been difficult. COVID is making it difficult. Competition is multifaceted across different types of investors that are morphing and becoming cross-functional. And there's really, think big picture, like GDP grows maybe 3% a year, and depending on what country you're in, excluding the robust years here and there in China or Brazil or Mexico, what have you, but really we're talking about population growth and GDP growth that's running about 2-3%, maybe inflation 3-4%. But that's certainly not the case in capital. If you look at capital formation since 2010, I'm not sure what that number is, especially if you look at it since 2015. And again, after COVID, there's significantly more capital, and I think there's too much capital, not enough deals. So there's that issue of a supply and demand imbalance to make good investments. Ultimately, if there's too much capital and there's an equilibrium in the market, then theoretically assets can be overvalued for a period of time. Most people think that smart money thinks that there are assets that are overvalued. So when there are assets overvalued in the private markets, especially larger companies over 100 million, over 500 million, with a lot of capital looking for companies to buy and build efficient wealth in private assets, 3, 5, 7 years, 10 years, with modest amounts of leverage available, depending on the market situation. That really gets back to the key driver of successful investments, which is really people, human capital, leadership, effective culture, retention, equity, ownership, incentive, stickiness with the customer internally, externally, and the business strategies of keeping your customers sticky as a brand, as a company, but then on the inside, keeping your people happy and growing and sticky as well. So there's the human capital recruiting side, which is also tricks to all of those. And then as an investor, whether it's in venture or in real estate, especially certainly in buyouts, you have to have, you have to really invest in the operating talent, both at the C-suite level, also at the private equity or investment firm level, and that includes advisory boards and investment committees. So it's a tall order to be best in breed in investing today, and it requires a lot of different factors to put together to be above average and be elite, reach an elite level of success as an investor. Again, looking way farther than traditional metrics of success around portfolio theory, portfolio construction, financial structuring, financial engineering, capital formation, deal sourcing. These are all the bread and butter. Those have to be covered as a minimum now, and then focus on the other areas of real value add to drive success, drive returns, build a track record. So I think that's where we are today in the market, with a significant amount of capital. On the family office side, now you're looking at 15,000 family offices globally, maybe half in the US, and they are quite liquid, increasingly going sophisticated, partnering together and with private equity firms and looking to buy more companies themselves as a means of efficient wealth creation for long-term holds, as opposed to investing just in funds or hedge funds. That's been changing a great deal in the last couple of years. So it's exciting for us, for example, to work with other families, but it also means the private markets are increasingly getting a little more crowded and more competitive. Simultaneously, the public markets are getting a little trickier to actually get those exits.
Thank you, Adam. Take a go. I'm going to go to another huge bucket that we didn't get to yet. So, how would you suggest board practices are changing to mitigate risk and align with shareholder values, which there was a period of time that they didn't necessarily bring values of the person or the organization to the front. Now that's a absolute need. So how do you see some of the board practices changing around risk currently?
So let's focus on the private market side. And in terms of the family office business as well, I think governance is increasingly important as a mechanism for intellectual capital formation and best practices for the investor, not just in private equity, but in the family office space or the family enterprise space, to have a board of directors. Just having a board does move the needle up in terms of the quality of governance itself, and having at least one independent director or several. I recommend 5 members, but if you really want to stack it up, you can do 7. Try to have an odd number, have at least one independent director, and really that role, I've been on 10 boards and there's always been an independent director. I think that role is super important just by itself, and it's important to recruit carefully and find some very special talent for that, at least that one role, if not 2 or 3 that are non-family or non-founder roles for a broader viewpoint on the board. You can source people for boards, especially, and C-suite, as you know, on LinkedIn quite effectively. I think in the old days we'd have to go to Monster.com or Indeed.com or hire Spencer Stewart or Heidrick and Struggles, Korn Ferry. All those still work, but I do think as a kind of a polymath user of LinkedIn, and 20-year user of LinkedIn, and recruiting lots of people myself there, it's super convenient and friendly and easy to do using AI now. Right. And there's 1 billion people on LinkedIn now. So ultimately, LinkedIn's interesting because for hiring for governance, as opposed to a full-time C-level person, which leans itself more to the high touch process of a recruiting firm, I think LinkedIn is the way to go for boards, all different types of boards. It can be a trustee, it can be independent director, it can be a chairman, a vice chairman, it can be an operating partner, it can be an advisory board. That being said, there are some boutique platforms out there on the board front. I founded one of them, Wisdom Board. These niche platforms can be useful in certain ways. However, from a scale perspective, you need to reach a large number of people. I think that GLG is still the largest, most powerful independent platform for renting and paying for talent. It can also include governance, although I don't think governance is really their expertise, but you can find talent there. And then there's some niche platforms that are quite interesting, again, for board, but more for experts on a periodic basis, like Vintro and Intro.com, taking off to find talent efficiently. That's more by the hour, but you can as a user, as a board, as a family office, as a private company, you could go into these platforms. I recommend to maybe hire someone as a consultant, usually $100, $500 an hour, start a project, perhaps for a month, and then see where it goes. So those resources are relatively new in terms of their robustness. I think it's a very important area for governance, but ultimately, governance, to me, is about intellectual capital, having a range of opinions, both gender and skills and different industry, areas and find a more colorful palette at the governance level to be value add and provide a broader viewpoints to the family or to the company.
Excellent. Thank you. So we touched on values very briefly, but that's one of my favorite topics, especially now that I am mostly retired, and I am thinking about like my one of my holdings is 5 Generations LLC. It's not by accident that we named that, right? But can you tell us about aligning family values with the business to ensure multi-generational success? Because I know you've been doing that for decades. How do we help the family office make sure that their family values transcend through the other side of a business, especially on long holds? Where so open that big bucket. You have 5 big buckets we're going to jump into. So go as deep as you want.
Okay. What kind's your dog, by the way? Is it a lab? You got a...
Sorry about that. Apparently my great-grandson has come home to visit, and the dog thinks he's his uncle, I guess, because the dog and the 2-year-old great-grandson get along a little bit too good. They're quite a pair.
That's cute.
Sorry.
Yeah, dogs are great. So I'll take the question in one direction in terms of let's say, how to keep the business going through tough cycles, different generations of the family business. I can take expertise from M&A, investment banking, legal, private equity, independent sponsor work, merchant banking, family office, hiring, firing, board governance. So, yeah. Look, some businesses are meant to last, and some are not. There's sometimes a viewpoint, especially from the consulting world or from the academic world, or looking at theories of business continuity and built to last and permanence and the importance of longevity. I think that's really laudable and really important for everybody as owners and founders to try to continue to succeed and innovate and grow as long as possible. And then at some point, as we see in the literature and academic studies and family-owned businesses, there are times based on industry changes and trends or changes in the company or their effectiveness that a business is really not in a great position to continue to grow, no matter how much TLC and new human capital and change in the business you put into it. There are broader factors sometimes that affect the continuity of a privately held company, especially a smaller, like sub-$1 billion. So I think having a board, having owners that are looking at, okay, what is our real purpose here with this company? And usually it should be, or most of the time it should be, maximum wealth creation with that single operating company and the impact of that wealth to the owners and to their children or to their equity owners and their employees in their community. And I think what's important to support these businesses as advisors, it can be an accounting firm, it can be a consulting firm, strategy firm, can be the board itself, is to say, hey, this is a tough industry. This business is having a tough time. This business is going to be hard to pivot, and your margin's going down. There's cannibalization. There's shrinking market. Your TAM is shrinking. Your competitors are growing. Your children don't want to run the business. You don't like to manage people. You don't really want people to tell you what to do. You're sitting on $100 million potential distribution if you sell the business. So at some point, that there is essential value in the governance and in building growth plans and trying to build the business bigger, and some portion of companies will succeed at that, and that's great. Like, that's very inspiring. That's good for them. But for the other companies that are not really meant to grow, I think it's important to help them, give them insight and support them, and reality check in different mechanisms, different venues of conversation, to make sure that they're not missing that window, and to get out and sell and monetize and respect that legacy that has been built up over decades or centuries, particularly in Europe, non-US countries, where there's much more longevity than just G2. It can go 5, 10 generations, 15 generations. And so on the one hand, it's there's a certain romantic and an intellectual desire to have that business going, but it seems to me that it's better that it's actually sold with some pride and money than losing it completely to nothing. And that's one area I think it's important for people to, the owners and their advisors, to keep in mind and to protect against that risk.
Okay. I know that you published this on LinkedIn, so I don't believe it's too confidential, but whatever you can share, you were recently a speaker in Europe for a small group, but a very important group. Could you share some of that with us today?
Sure. Yeah, I was the keynote speaker along with a couple other really interesting people in the largest family business conference for Central Europe, sort of hybrid of Eastern and Central and Western Europe, in Slovakia. So the audience was mostly Slovakian, but also Hungarian and Czech and Austrian and Polish. There was about 400 registrants. So over 2 days, in a beautiful hotel that's renovated for apparently $100 million. I'd highly recommend visiting the Hotel Belu in the farm country of southeastern Slovakia. Highly recommended. Sort of like a more rustic version of Tuscany in Slovakia. So there, the conference was for me and the keynotes to share, and other founders and experts share really the tenets of family business, primarily for G1s, and take into account the more modest commercialization and capitalism that is less developed in those countries than in most of the OECD and Western world, especially the US, and bring those lessons over to talk about the importance of legacy and succession planning, governance, like you're saying, cross-border building, getting out of your country zone, looking at exports, looking at partnerships, some M&A, but also thinking about the importance of preparing for G2 for the children, or not the children, and just being more prepared, more mind share outside of the day-to-day grind of the business. So it was really interesting because it was, speaking to 200 people with headsets, mostly converting from English to Slovakian, make sure they heard everything. And I did a presentation custom for them with my friends at the Family Business Center. I'm an advisory board there. That's the largest family institute, family enterprise institute in Central Europe, in Bratislava. So I'm an advisor there, and part of my family's from Eastern Europe, so it's Central Europe. So it's a nice tie there. They do a great job. They put this together with their friends at the Instituto Rodinho Business Soup, which is the institute in Bratislava for family business. It's very unique. I think there's certainly lots of conferences. This one was quite unique because it was really dedicated to the G1s and covered a wide range for Central Europe, which is an unusual hybrid of the NATO European community, but also has those roots that tend to be a bit more structured and not as entrepreneurial, and they have those ties into the socialist and communist legacies, which don't really encourage entrepreneurialism as rapidly as they do in the Western world.
Okay.
Yep.
Thank you. And that was a beautiful hotel. I like to think that the Drummelin in Ireland is pretty special, but they only spent about $30 million on their upgrade. But in any event, I'll remind us that our audience is CEOs and owners that are looking to hire keynote speakers on very specific topics. We pride ourselves at CEO Zones in curating the best of the best. And quite frankly, hopefully that's coming out loud and clear. You are our family business, family enterprise expert. But some of the keynote topics that maybe they would be able to talk to you about and you would have a presentation about would be capital management, strategic planning comes through strong, growth and wealth building, human capital, how do we invest in the people once you own a business. And then the last one around legacy, enhancing your family legacy for the future generations. You want to just give it a little pinpoint of what you might talk about in legacy, family, future, multi-generations again?
Yep, will do. Thank you. Yeah, I'm quite busy with my day job in the family office business, so I'm not planning on yet being a successful, independent, full-time speaker or author or what have you. Let's say John Maxwell style or Simon Sinek or Kyle Westaway, or at the upper levels, my friend Ron Diamond in the family office space, Jason Ma in the next gen space. Obviously, in your world in management, there's rather endless speakers on thought leadership across the C-suite and management and leadership across the more traditional knowledge of management, best practices, excellence, etc. There's no shortage there, of course. That's been going on for decades, but I think in the family office, family enterprise area, it's relatively new, even though the operations of family businesses and like unofficial family offices has been going on for hundreds of years, back to the Rockefellers, back to the Rothschilds.
The Rothschilds come to mind, right?
Back to the Indian families of 10 generations. We don't even know they exist in China, in older countries, and of course in the Benelux region, in Germany, in Italy, certainly in France and Britain. There's just like very long-standing family businesses. But nowadays, in terms of legacy, I think the family office is an important mechanism to professionalize, institutionalize, staff the activities of a wealthy family member that has a family or doesn't even have a family. If they don't have a family, then their legacy is more tied to their personal interests as an entrepreneur, and they may not even care. Some portion of them won't care about their family office. They'll care more about their legacy. That legacy might be wealth as a means to an end, or it might be the spending of that wealth into other areas that are passion related. So everybody, in my opinion, has their own legacy, and they deserve to have their own version of legacy. So as family office experts and speakers and writers and academics and think tank experts, I've been writing numerous articles on family enterprise, family office, family culture, succession planning, next gen, private, public policy collaborations. Just published one on familybusiness.org this month on that. topic, super interesting. This dynamic of size and influence in society and culture with a larger family enterprise, and their relationship with or from the government of that country will become. We see the intersection of private sector today with our government in the U.S. in an unusual way, but I think that's more of a transient dynamic in the U.S. society with Elon Musk. But I think if you go back, especially in Europe, hundreds of years, I wrote this article, for example, talk about legacy, is that if you're really looking to protect that legacy of a scaled business, and let's say you don't have children to maintain the family business, that's okay. You can still protect the business without the family and find other ways to do that. So that legacy can be protected in ways I think that require a bit more creativity. So it can be money, investors, it can be merging, it can be subsidies from the government, it can be a reverse merger. It's not just, hey, let's just grind it out and get the cash flow distributions from the OpCo and hope that it lasts, or expecting to go public as an IPO, especially as a cash cow, is not typically going to happen anymore, as the markets are more growth oriented than value oriented. You're not getting the multiple on the public markets as much, so you're kind of stuck. If you're a cash cow and you're happy with your legacy, if you have kids that want to run it, that's great. You're fortunate to have that. Give them a chance to do that. Maybe they're successful, maybe they're not. Often those children need support. They need to be sent to Harvard. They need to Harvard X. They need to go to INSEAD. They need to give resources to manage people, to do some side projects, travel the world, sit on the board, So for those next gen that want to be part of the business within the family enterprise, it's super important to focus on the human capital side. And then if you're thinking about really investing professionally, wealthy CEO sells a company, set up a family office. You have your wealth. You have more organization. You can hire people. You can give them equity. You can have a board. You can go to family office conferences. You can get admitted and be part of society that you are. It's another level. You have access, and there's tax benefits. There's organizational benefits, and you can use that family office as I'm in now and have consulted numerous family offices. It's really a corporation founded and run by the family. It just happens to be called a family office. I think that term is becoming a bit diffused and complicated, and that will probably something's going to change the next 5-10 years. So I tend to, on the podcast and newsletters and articles and talking to people, mentoring and building up our own family office, more of a family enterprise, because the enterprise, I think, is more tied to the traditional definition of what is a corporation. It's an enterprise to build wealth and to have an impact on society. The office is just a mechanism, administrative mechanism to do that. So sure. That's a bit on legacy. Everyone has their own, and I think having that passion to pursue your own legacy and to feed it and curate it and support it in different ways. It can change, but I think that's super important. Every family business should have a sense of legacy, even if it's just a family charter, mission statement, something that kind of feeds its way through the purpose of the business and can be shared as a cultural bonding agent, and also for your children, and leaving that behind. That's sort of I think that's the most important societal dynamic of what's going on in the family office space is people building legacies of wealth and then non-wealth. like the harder and softer elements of those families.
Another huge bucket we won't have time to get into today would be generosity, but I think it would be interesting to have you back and maybe have several people back from CEO Zone's content partners to talk about generosity, how to do it, why to do it, how do you match that up with your own values. But that's a big topic at this point in my life because, yes, you can have businesses going on for generations, but you also want to instill that giving back and serving others. So we'll come back to that in a separate video, I have a hunch. But this video, what we want to do as we bring it to a close is for our audience of CEOs and owners looking for speakers, looking for, I'll say, subject matter expertise second to none. You can contact Adam at rasacapitalpartners.com, on his LinkedIn profile, R. Adam Smith, his website, adam-smith.com, and if all of that fails, our logo will be in the video, and you'll know to go to CEO Zones, and he is a content partner and has his own page and his own topics and his own videos inside our app community. So we really appreciate your time today, Adam. I know you're very busy. I assume you're in New York City just because of who you are and where you are. And I do think it was 11 years ago now we met for lunch the very first time in New York City. As I listened to some of your questions, I was going back through my mind what was going on and why were we meeting, and I think it was about then. So thank you so much. We really appreciate you sharing your knowledge with us. And we look forward to hearing that a CEO, a board, an owner has reached out to you for some type of contact. So thank you, Adam.
That's nice of you. Great service you provide, and our continued dialogue across different chapters of our life show the importance of keeping in touch with people, and even if things change, you're not necessarily working with them, and respecting the basis and the preciousness of those relationships over time with people you like, and you never know where it goes.
That's a whole other topic, relationship capital, but you are one of those. So thank you very much.